Hey, good morning. Let's go over today's trade plan. So in the overnight session, the sell side has been dominant, and even on the larger time frame, the sellers are technically still more dominant and in control, and that bigger balance breakdown idea can still be in play. So yesterday we got a bigger bounce than anticipated, but the larger structure still supports the sell side as long as ES can continue to hold below the 50.75 to 52.75 area and 56 to 58. Now, on the smaller time frames heading into the open, we're going to be using 36 to 38 as the micro bull bear zone, with the idea that if the market is truly quite bearish, then it could continue to hold below 36 to 38, below the 40.5 high volume node. From there, on the downside, we have pre-market support at 29 to 31, followed by 26 quarter, and then some better support at 20 half to 23, which is the initial support zone on the day. And then beyond that, we have 13 to 15 and 08 half to 10 half, and then the recent swing low at 2100 quarter, 2102 quarter. Now, we are trading in a higher volatility and higher momentum market, which means that the market is bound to take out a few of these zones to the downside, or if the buyers step in, even to the upside. So we do need to read the market more closely in real time and understand that even though there can be bounces along the way, no single zone has to absolutely hold. And the stronger zones are going to be lower. So 20 half to 23, 13 to 15, those are better spots for buyers to be active, whereas the zones that are closer by, even the buyers can be active there on first test. From a location perspective, they are kind of in the middle of the overall range, so we have to exercise more caution at those types of zones, like the 29 to 31. But if 29 to 31 holds, and then the market starts getting back above 36, 38, that is a piece of information that we can use to gauge whether we should short the market, for example, at 41.75 to 43.75. So on the upside, in the event that we do go back above micro bull bear, the closest resistance zone would be at 41.75 to 43.75, and then the bigger resistance area is at 50.75 to 52.75 and 56 to 58. Now, if that bigger idea of the balance breakdown is going to continue to be in play, then we want to see the market holding below 50.75 to 52.75. That's really the key zone. And 56.58 would be the final spot. So in the event that the market starts taking out 50.75 to 52.75 and 56 to 58 on the upside, then it really takes away from that balance breakdown idea. And at that point, we could simply be in more of a neutral bias market where we're simply balancing in a big range. Now, sellers can still be active at the resistance zones above, especially at 69 to 71. That is larger time frame resistance, but it just tells us that we're not in this bigger picture balance breakdown pattern. So, those are the bigger ideas that seem to be in play. And within that bigger idea, we can get short-term swings up and down. But as far as our overall bias goes in the market, if we're holding below 50.75 to 52.75, below the 40 half high volume node, then sellers can technically still be overall more dominant. So, yesterday I know it was a bit of an unusual bounce, and it was definitely larger than expected, but it doesn't really break that pattern. The balance breakdown pattern is still intact, and it can continue to be intact even if we balance a bit here and then head lower. So overall, our bias is still more bearish. The overnight bias is certainly bearish, and on the downside, given the pickup in volatility, we could be seeing a move into 20 half to 23, perhaps attract some buyers over there, and then we'll have to see how the market's developing in real time. Because if there is excess weakness and the other markets are really breaking down as well, then even 20 half to 23 doesn't have to be the end of the move, because we have just such a wide range that has been established now. So we could even go down into 13 to 15, 08.5 to 10.5, and then the recent swing low is 2100 quarter to O2 quarter, but of course we have to take it step by step. Because we're trading in such a wide range on such high momentum and volatility, we just have to read the market more in real time, make updates, to our key areas in real time. That means that new patterns are going to develop, new zones can develop. When the volume's running this high, there are new patterns developing pretty rapidly. So you really have to be on top of things in real time and continue to really assess the state of the market. So those are the main ideas heading into the open. We will probably see good setups on both sides, long and short, but given that the bigger bias is still bearish, we're still going to try to be more active on the short side and exercise more caution on the long side. So those are the main thoughts. Let's see if the sell side can really dominate and maintain control today, and we'll take it from there.